Assalamualaikum warahmatullahi wabarakatuh and good evening everyone. My name is Nurul Syafiqah binti Juso and I am from group BA27238A. Today, I will be presenting my topic titled Trust Issues Between Consumers and Insurance Companies. This topic is very relevant because insurance is supposed to provide protection and peace of mind. However, many consumers today feel unsure and hesitant when dealing with insurance companies. Throughout this presentation, I will explain why these trust issues happen, the common insurance problem faced by consumers, and the insurance principle related to the issue. Trust toward insurance company is generally much lower compared to other financial institutions. Statistics show that only about 30% of adults trust insurers to provide good policies. Even among policyholders, trust is still low at around 50%. When we compare this to banks, the difference is very clear. Banks are trusted by 74% of consumers, while insurance companies are trusted by only 90%. For non-policyholders, confidence dropped even further to 25%. One major reason for this low trust is frequent claim rejections, which strongly affect how consumers view insurance companies. Most common issues is claim rejection due to incomplete or undisclosed information. Many consumers do not hide information intentionally but misunderstand what details are important. However, insurers treat this as a breach of policy terms, making them seem strict. So, consumers lost trust in insurance companies even after paying premiums for a long time. Another issue is the non-disclosure of business activities and the use of unlicensed claims are rejected because this situation fall under policy exclusions. Consumers usually expect coverage, believing they are insured. When claims are denied, they feel shocked and disappointed and talk. Policy terms are unclear, which reduces confidence in insurance companies. Many consumers assume insurance covers all losses and risks, but this is not always true. Claims are often rejected due to policy exclusions and coverage limits. When this happens, policyholders feel misled or poorly informed from the beginning. This creates the view that insurance is confusing and unreliable, leading to trust issues between consumers and insurers. Another issue is poor maintenance or gradual deterioration. Insurance policies usually do not cover damage caused by wear and tear or neglect. Even serious damage may result in claim rejection. Consumers then feel insurers are unsupportive during difficult times. This experience strengthens the belief that insurers try to avoid paying claims, further damaging trust. Another common problem is the lack of sufficient evidence or documentation. Claims may be delayed or rejected when consumers cannot provide complete proof. Many find the documentation process complicated and stressful, and they may not clearly understand what is required. This leads to dissatisfaction and mistrust, damaging the relationship between consumers and insurers. Underinsurance is also a major cause of trust issues. It occurs when the insured value is lower than the actual value of the assets. Because of the average clause, claim payouts are reduced. Consumers then feel undercompensated during losses. This creates a negative perception of insurance companies. Now, let's take a look at the principle related to the insurance issues. The principle of utmost good faith requires both parties to honestly disclose all material facts. When information is incomplete or not disclosed, claims may be rejected. Consumers often feel this principle is applied too strictly and may not understand what information is material. This causes misunderstandings, frustration, and loss of trust in insurance companies. The principle of insurable interest means coverage only applies to losses stated in the policy. Claims are rejected if the loss is outside the policy scope. Many consumers misunderstand this and assume wider coverage. When claims are denied, they feel confused and disappointed, which contributes to distrust and dissatisfaction with insurers. The principle of indemnity ensures compensation covers only the actual loss. In cases of underinsurance, payouts are reduced. Policyholders often feel the compensation is insufficient, especially during emergencies, making them feel insurance does not fully protect them. This weakens confidence in insurance products. The principle of proximate cause focuses on the main cause of loss. If the dominant cause is excluded, such as poor maintenance or wear and tear, the claim is rejected. Consumers may see insurers as strict and feel they look for reasons and not to pay claims, reinforcing the perception that insurance avoid responsibility. In conclusion, trust issues between consumers and insurance companies arise mainly from frequent claim rejections, misunderstandings of policy terms, and lack of transparency. Technical exclusion and poor communication increase consumer frustration. To rebuild trust, consumers must better understand insurance principles, and insurance must improve communication and clarity. Stronger trust will benefit both consumers and insurance companies in the long term. So I think that's all from me now. Thank you.